Well, good morning, everybody, and happy 2024. Thank you very much for taking time out of your day to join us. My name is Matt Alina, and I'm one of the marketing managers here at URL, and I'm joined by my colleague, who is our annuity specialist, annuity guru, Cody Wilbert. And we have a great presentation today for you, and it's all about inflation, talking about protecting families during those times of uncertainty, which is the Inflation Protection Program. It doesn't take us very long to be looking at the news, looking at newspapers or whatever, and hearing that the cost of living is going up. Our paychecks aren't going as far. We're in election season, folks. You know that during the election season here for 2024, you're going to hear about inflation day in and day out. The Fed's doing this, the government's doing that, supply chain, supply, demand. It doesn't take very long. You can turn on the TV right now, watch some of those 24-hour news cycles. You know that during that 24-hour news cycle, you're going to hear about inflation. Inflation is up and this and that. So going back several weeks, I was doing this brainstorming and I thought, okay, what can we as insurance professionals do to protect the families that we serve during these times of uncertainty? And that's where I started doing some research, and I was kicking that idea to Cody as well. And really, the life insurance and the annuity team, this is really a thing that's really up our alley. And this is an opportunity for you to be able to take advantage of the Inflation Protection Program. So what is inflation? Generically, inflation is the rate of increase in prices over a given period of time. Inflation is typically a broad measure, such as the overall increase in prices or the increase in the cost of living in a country. So it doesn't take us very long when we're leaving work or running from appointment to appointment and we have to get gas in the car. That's a great example of where our paychecks just may not be going as far as they used to. And you see $3, $4, $5 a gallon. Pennsylvania, we're graced with some of the more expensive prices of gas in the country. A lot of that is taxes, but that's another topic for another time. But really, it's the cost of goods and services. Go to the grocery store. You know that we're not getting stronger as individuals, but when we are walking out of the grocery store in 2 bags, and that's $200 of groceries, it's not because we're able to lift $200 of groceries. It's because the cost of those groceries are more expensive. So when you look at that, when you look at stress, inflation, it's consumer concerns, and looking at some of the statistics, you'll see that 85% of Americans are concerned about inflation. Another 58% are concerned about the cost of living and just being able to support our families, things like that. It's also the country's financial situation, and then, of course, their own financial situation as well. So as we're taking a look at all these things, we're going to be talking about inflation, cost of living, and really how do we provide clients with peace of mind during periods of inflation. That's where we came up with this Inflation Protection Program. A lot of what you're going to hear today is going to be talking about how do we help the middle class, how do we help people in their homes. But this can also transcend into small businesses and protecting those small businesses. A lot of businesses, because of COVID, a lot of businesses were shut down because of COVID and things like that. We are able to help keep those businesses open as well. And we're going to get into some of that. But you're going to hear more about how do we help the family of 5, the family with a couple of kids and stuff like that. So how does this program work? It really boils down to education. And as a broker, you must educate your clients and make the appropriate recommendations in an effort to provide the peace of mind. So basically, in a nutshell, you're working as a fiduciary. You hear that a lot. Protecting your clients' most valuable assets, which is their income, and also so the money that they're bringing in, and also their savings, their nest egg. There's basically three phases of an adult. There's the acquisition phase, which is what I'm in, what Cody is in, what many of us are in. If we're working, 5 days a week or whatever, working a full-time job, we're in the acquisition period where we're getting money to be able to buy the house, to be able to buy the cars, to be able to buy the furniture, to be able to acquire assets. Then the next phase is the retirement phase, which is where everything that we've acquired during our working years, we now have to live off of that. And then after we go through the retirement years, then you get to where my parents are in their late 70s, early 80s. And then it's basically you're giving a lot of that stuff away. So there's three phases: the acquisition, the acquire, retire, and then giving it away. So here are the steps to the Inflation Protection Program. The preliminary steps is really just prospecting and setting up appointments. So how do you prospect? It's really just talking to people, going out there and letting people know exactly what you do. We live in a world of social media, so just being able to put stuff out on social media, saying, maybe sharing a headline about inflation and how you can help people, your friends, your family, in basically protecting what they've already acquired and protecting what maybe they're already in retirement, being able to protect their retirement. So if you've been receiving our emails, you've been getting some information about the Inflation Protection Program. You'll see it here on my camera. There's an Inflation Protection Program agent guide, and then there's also a worksheet. We'll get into that here momentarily. First step is to complete the worksheet together, including the household budget sheet. That household budget is actually one of the most important tools that you're going to be doing or using, because most of our clients they're not living within their means. They're not living within a budget. It was actually very eye-opening that one of the things that you need to know, or what a person needs to know, especially during times of inflation, is where is their money going? So I'm going to ask Cody a question. I'm going to put him on the spot here, and I'm already going to answer the question for myself, me and my wife. We do not have a written budget, and I am the sole breadwinner in my household. So when I know what I make, my wife knows what I make, and we live off of my paycheck. We have never put into writing how much our mortgage is, car payments, and all that stuff. So Cody, I'm going to ask you, do you and Christy have a written household budget, something very similar to a worksheet? Do you have a spreadsheet put together?
Yeah, so I think initially that isn't something that maybe is on everybody's mind or is a priority to everybody, Matt. So that's a very good point. And maybe prior to working insurance, that might not have even been, on my priority list or something that I would have done. But one of the things that you can really, use is a one-sheeter, something to keep things very simple, very basic for you, like Matt has up, and will be able to provide for you, to kind of go through your assets, listing everything that you have. It'll come in use for many different things down the road. There's a lot of times where I see people use them for wills. I see a lot of times where it comes time for an annuity application, and instead of scrambling, or a life application, instead of scrambling to get all of your assets or get everything in line, you have it already organized. You can take it out of a folder and go, look, this is approximately exactly what we keep in qualified funds or non-qualified funds, or this is what we have in our 401ks at this point saved, or, kind of prioritizes and itemizes everything for you. So yes, at this point we do, Matt, but to your point, I don't think it's a priority right away for everybody, or everybody doesn't realize how much they can actually get out of just listing those things and really make it helpful for themselves.
Yeah. Only 35%. This was staggering. I'm one of I'm one of the 65%. Only 35% of US households actually prepare a monthly budget. When I saw that, it kind of hit me over the head. And you need to know where your money is going. And I said to my wife, I'm like, honey, we need to actually sit down and know exactly where our money is going. We're making money, and we need to know where it's going. The other thing, when you're doing household budgets, a killer, and this was eye-opening, is when you bust out that plastic, that credit card. That is a killer when it comes to finances and somebody's financial health. So step one is to complete the worksheet. Step two, as a fiduciary, as an agent, a broker, is make note of any current life insurance, disability, annuities, and other investments. Step three is to then make note if the client is concerned about outliving their money. They may already be maybe towards the end of the acquisition, the acquire period, and they're going into retire, or they're already into retire. And one of the biggest concerns is that they're going to outlive what they have. Or maybe they're looking for some potential tax deferred investment opportunities. So you're keying in on some of those things. Step four is to compare household income versus expenses. This goes back to doing the monthly budget. For some of us, it's going to be very eye-opening to see exactly what we're spending our money on. And for me and my wife, one of our forms of entertainment is going out to eat, going out for dinner, some drinks. That's our form of entertainment. And when you start adding up all of the receipts week after week, it's like, man, we spend a lot of money going out to eat, when you can maybe stay at home and cook a really good meal at home for half the cost. And I don't know about you, Cody, but when my wife and I go out to dinner, we may not even be going to a specialty restaurant. But when you're talking about a couple of drinks, maybe an appetizer, an entree, don't even really do dessert, it's easily $50. Easily $50.
Yep.
So you start showing people where their money is going. And then step five is to show the client the financial impact the family will feel should the wage earner or earners become either disabled or died. People on a fixed income have other concerns. It could be that there may be people that are living off of Social Security. We may need to step in and help them preserve their Social Security income. There are ways to do that. That's a separate webinar that we've done called our Social Security Protection Program. Step number 6 is to make calculations and recommendations. When you're doing life insurance should pay off debts, replace lost income, and provide living expenses, things like that, to keep the family at the same level that they've been accustomed to living. When it comes to inflation protection, Cody, what are some things that people should key in on for annuity opportunities?
Yeah, that's a great question. I would say, for inflation protection and what to key in on, a lot of times you'll see people bring up poor performance, loss of their current assets, things that they have going on at that point. Another big one to look at for them is loss or moving jobs, 401ks, things like that, they're concerned with, because to Matt's point, a lot of folks have something that they have in mind of a fixed income or something that they're going to have going on in the future. Well, in order to obtain that, you really need to protect your assets. And especially once you get to a certain point in your retirement process or closing in on that retirement process where, okay, yes, you might be moving jobs. Yes, you might have stopped working, but it's now time to kind of lock in that safety, that protection, some of those guarantees that you can get out there to better help protect against these things and better help protect against inflation. Again, loss, because that's a big one that we see. Folks get out of retirement, get their 401ks and go, I have this money, I don't want to run out of it, and I don't know what to do with it, right? Everything's getting more expensive, but I have this fixed number. What can I do with it at that point? And we'll get a little bit more into those options there. But to your point, Matt, yeah, there's a lot of things when you hear, people talking about poor performance or loss of jobs or having maybe even the word financial advisor. When you hear that, make sure that those folks are doing their job and staying up to, their role in being fiduciary for their clients as well, too.
Good points. Good points. Step number 7 is to provide some recommendations, provide term or permanent life insurance quotes. Some people may be in a job that requires their physical body, where they're doing physical labor. That's sometimes where you have to be able to provide disability quotes. Highlight how the rates never increase. The coverage is guaranteed. Benefits are paid directly to the beneficiary, tax-free. It avoids probate. Step number 8 is to complete the application process and congratulate the client on really making a wise decision. It's providing them with peace of mind, and it all starts by having that conversation with the client. So let's talk a little bit more about annuities. So I'm going to hand this over to Cody, and he's going to discuss how annuities can help your clients with income and providing peace of mind on the annuity side of things. So go ahead, Cody.
Yeah, thank you, Matt. I appreciate that. And I'll tell you, just to kick back to 2 things you were kind of discussing earlier, I think budget-wise, even for us, one big thing was going through and seeing some of those expenses like you had mentioned. And those food costs and things like that are adding up a lot too. So it's a good way to also see where you're spending your money and maybe reallocate some of that money as well. One of our big costs, or one of our big things that came up, was daycare. Daycare is a big cost. It is always going up. And at that point, we realized, hey, maybe we can afford a rental property once our son goes to school, because there's actually a lot of money going into this daycare thing. So, and inflation is kind of hitting everywhere, but that's really where our monthly budget started and where we were able to really work on that. And again, the $200 in groceries. I used to look like a superhero carrying groceries in from the car. Now $200 in groceries, I have 3 bags. So it's not meaningful at all whatsoever when I'm doing it anymore, but it looked that way. And to your point, Matt, one of the things that a lot of people were looking for was income. And a way to protect against inflation is some income and some guarantees on the income side. So a lot of times that's where annuities get in the conversation, and I'm able to talk to folks about how can you really use an annuity to help your client with income or help with inflation. Many ways you'll see with annuities, they offer guarantees. And a lot of people like that word, but I'll show you exactly what I mean by guarantees when it comes to annuities. And one of the biggest ones is actually in the title of a product called a multi-year guaranteed annuity. So what that product is very similar to your bank CD that you would go out and see, that gives you a guaranteed interest rate for a guaranteed period of time. What's nice about that is you are getting exact thing, guaranteed period, guaranteed rate. So you now know your exact guaranteed growth on the money that you're putting in and the exact guaranteed benefit that you're getting back from that investment. So a lot of folks really like these type of investments. And with rates kind of going up here with our multi-year guarantees, we're getting closer to 5.5%, 6% that we can lock in and guarantee folks. So they're becoming very, very popular from that way. One of the good ways to use these as well is kind of a short stopgap for bridging Social Security turn-ons or pension starts. There's a really good way to use these where, number one, you're either just growing your principal money that you put in, or number 2, you're able to get an income. And that's kind of the example that I have here below. So we put in $100,000 at 6%. Over the next 10 years, that client is guaranteed to receive a paycheck of $500 a month for the next 10 years. After that, they walk away with their original investment. That's that speaks a lot of volume when you go in and talk to folks. And it doesn't have to be for 10 years. You can talk to somebody maybe about 3 years. Maybe they're 62, waiting to be 65 to turn on Social Security, or 65 to 68. I see that a lot where folks are like, I just want to stretch it a little bit further because my benefit is better at this age, or I know what I'm getting is going to be so much more impactful at that age. That's great. These multi-year guarantees can kind of fill that stopgap for you, or really turn on, an income to to help before you start your Social Security or go on to anything else like that. Another one we have here is fixed indexed annuities. So I always say we have our multi-year, our guaranteed annuities, and then we have our fixed indexed annuities. What's really great about a fixed indexed annuity is a lot of times you can get an income stream from them. Again, let's talk guarantees again, because that's what our clients want to hear. We're talking about a guaranteed lifetime income stream that your annuity is going to pay you no matter what happens to your balance. You won't hear that often. So what I mean by that is, let's say that you turn on income and you start taking it from your annuity, and we are now 15 years down the road, you've been receiving the same paycheck from your annuity that you expected to get. Number one, very nice. It's very similar to working. You're getting a paycheck when you expect to get a paycheck, and it's coming in on a monthly basis. You can even have it come in on an annual if you don't like a monthly basis. But with that being said, we're now looking at taking that money and getting an income. 15 years down the road, we've been getting the same income, and now our balance is at zero. Let's say we get that statement and we see there's nothing left in that 401k account that we moved over 15 years ago. This annuity is guaranteeing you that exact same income for life, regardless of what your balance is. And that is a perk of an annuity, and a perk of a fixed indexed annuity is you're getting a guarantee. So a lot of times I relate it back to the folks that want to get an income from the lottery, right? They'll say, oh, he could take the lump sum, or he could take the 15, 20, 30 or lifetime payout. You know, that's when they're using an annuity to do those type of things. They're putting the money in, guaranteeing a payout for that individual. And a lot of times folks, you know, won't take the lifetime payout. But in an annuity standpoint, when we're talking 401ks and not lottery winnings, we really are talking income riders and producing an income from that annuity. So let me talk about two examples here. I put one here, male 65. Let's say he's getting ready to retire. He has $100,000. He could immediately put that into an annuity 30 days after the policy issues, take an income of $7,930 a year or $660 a month. That's for the rest of his life. So nice income he could produce there. Let's say he has a little bit more build up. Let's say it's $200,000 that he wanted to immediately take. We're looking at doing a little bit more than doubling here. We're looking at $15,860 or $1,321.66 a month. So really nice income. Again, this is fully guaranteed. This is something that they cannot outlive. And those are words that I kind of stress or push when I'm talking about these things with the client, because honestly, that's what they want to hear. They want to hear guarantees. They want to hear that, you know, they're not going to run out of the money that they're putting into this investment, or, 10 years from now, they're not going to go, oh, I need to work again, because all of a sudden that 401k, I used it all up in something already. So a lot of times I use these as good ways to kind of show folks these guarantees and these income that they can receive from that. Some other good facts that I kind of wanted to point out is these payments can be distributed to you and your spouse. So that's something that a lot of folks don't realize is when you're talking pensions, a lot of times with companies, it's all about you, right? And yes, you might have a beneficiary listed, but they kind of look at it as Uncle Sam has this registered under you. It's going to be paid to you. And they kind of keep it very simple that way. Annuities change it up a little bit and add an extra avenue for you to really use and be able to kind of say, okay, yes, this is qualified money. Yes, it came from my 401k, but I'm very worried that my spouse, once I pass away, isn't going to be able to, maintain the bills or keep up with a lot of the same things. And Matt, as you know, Social Security goes away, for one of the spouses, and now you're looking at a loss of income. So this can be a very good way that with a 401k, you can add what they call a joint rider. It is still your policy as the owner of the 401k. However, when it comes time to pay it, regardless of if you or your spouse are living, it will pay both of you that income. Does not matter who's alive, does not matter who passes away first. That income is guaranteed for life, just like the payouts we said before. Another big perk is doubling these payments. So let's talk about inflation and how we know things go up again. Well, now let's double some of these payments. Let's say you need to go to a nursing home, you have home health care. You can now turn those previous payments of $7,000 and $15,000 here and double those payments for up to 5 years. Companies will double those, and after the 5 years, it will revert back to your original income. So you're not losing your original benefit. You're not losing anything from there. You're actually gaining the doubling during those periods of time. And some of our companies will even say, okay, let's say husband's a few years older, he actually uses the benefit for 2 years. Well, now we still have 3 years of benefit left, and now the wife uses this 4 years later down the road. We have a lot of companies that are now starting to make these hybrid where they're allowing for both spouses to use it, both spouses to cover those 5-year periods. It can be very impactful when you start to talk about the cost of these kind of things. The last one I have here as well, Matt, is some carriers will allow these riders to have inflation protection actually added into them. Not the most common thing you will see in the annuity world, but there are quite a few carriers, over a handful, that will actually offer for a little bit more of a buy-up rate, you can get inflation protection. And usually that is just matching whatever the inflation is that particular year or whatever you see. They're usually around 3 to 4% that you'll see that increase happen on. But they can also be very nice and kind of keep up with the inflation process as they go along and keep that peace of mind for your client as well too. So those are all kind of ways that I like to pair annuities with kind of having this inflation talk. A lot of it is around income and the savings that they can get from putting these investments into an annuity. When again, whether that is just a stopgap of a short period of time, maybe they have something that they want to cover, great. We have guarantees that are anywhere from 1 to 10 years of period of time. Or maybe it really is that, hey, I'm receiving that paycheck at work and I don't ever want to stop receiving a paycheck. That's when we get into our fixed indexed annuities and our guaranteed lifetime income riders. So I definitely think they can kind of fit along the way. And a lot of times they can be paired with life insurance as well to kind of give you double that protection of what you're looking for. And again, really protect your spouse and really protect that kind of what happens in your afterlife of what you're doing and really with inflation, because let's face it, whether you're alive or not, it's not going to stop. You know, things are going to keep getting expensive and they're going to keep going up. So really, you got to look for ways to guarantee yourself things, whether that's growth, income, protection to your family. You really want to get those things strapped down and get them while they're cheap. You know, as we say, things are going up, you know, they are only going up. So right now is always a good time to buy something like that or look at something like that. Or again, speak to your client about something like that who could be very interested in kind of expanding their portfolio or making sure that, hey, I am getting really close to retirement and I could now benefit from some of these things that maybe I didn't talk to you about in the past before. So it's always worth bringing those conversations to light.
Absolutely. It's kind of like life insurance is for the acquire period of time, and the annuities is more of the retire or just as you're about to phase into retirement. It's a great conversation to have with people. And again, it's providing a person with that peace of mind. So you're sitting down and you're talking to somebody and, you know, if you're going through all the steps, you're sitting down, you'll see on these on the sheet here that I couldn't have been more generic. I've got John and Mary. They're both in their early to mid 40s, and John's making $80,000 a year. Mary's bringing in $50,000 a year. Collectively, they have a household income of $130,000. That's not all cash, but you're looking at an income monthly of around $10,833. That's not taking into account the cost of their health insurance that may be taken out of their paycheck. It may not be talking about all the different taxes and other things. Maybe they're taking money out of their 401k contributions and all that stuff. But let's just say on the surface, collectively, they're bringing in about 10 grand a month between the two of them. John and Mary have 3 kids, ages 13, 10, and 7. And you're kind of sitting down and you're saying, okay, John and Mary, how much is your mortgage payment? They may have to put out their checkbook or their banking information so that they can see exactly what they're spending. It may be $1,800 a month that they're spending on their mortgage each month. It may be that they're spending about $800 a month on car payments or leases or whatever it is. Car insurance may be $125. And you're just kind of going through all that stuff. There is a section in there where they're spending about where there's like miscellaneous. So for some of us, it may be some of our toys that we want to get. Maybe you're a shoe person or the client likes shoes, like Cody likes shoes. And there maybe someone likes handbags, or maybe you're putting money aside and you work it into the budget that you go on a annual vacation in the summertime, take the kids there, and maybe they're socking 100, $200 away in there. There's give or take there. But what you want to do is be able to show people in black and white where their money is going each and every month. So in this example here, there's about $5,800 that they're spending in expenses, and they may or may not be socking money aside. They may have money in a money market or a CD. So you go through all this and you're like, okay, what do we need to protect? And they're a younger family. They're still in the acquire phase of their life where they're acquiring things. So there's a couple of ways on the life insurance side of calculating insurance needs. The very generic way is you say, okay, we have an income. We just go 10 times their income. Mary, you're making $50,000 a year. We need $500,000 for you. And for John, you're making $80,000 a year, so we need $800,000. So collectively, you're looking at about $1.3 million in death benefit. Another way to do it is the DIME method. It's an acronym for debt, income, mortgage, and expenses. That is where you have a life insurance policy that will pay off the debt upon anybody's passing. It'll provide an income for the surviving spouse to be able to maintain their current style of living. It'll pay off the mortgage, and it'll provide money for expenses or even education. E is kind of interchangeable. It could be household expenses. It could be for education. The third is actually an online calculator that we have on our website as a resource that you can use as a partner of URL. So let me kind of go through that. It's actually through an organization called Life Happens. If you've been in the life insurance industry for a while, you've probably heard of Life Happens. It's a nonprofit organization that is designed to help spread the word on the importance of life insurance. And they put together a really robust life insurance needs calculator. And it goes into, and I know that the slides are very small for you to be able to see that, but I just put in there kind of using what came off of the worksheet here, what we need to protect. So they need about $15,000 a piece to cover any final expenses, funeral costs, things like that. They owe about another, they owe $15,000 in credit card bills, car payments, something like that. Other than the mortgage. Maybe they still owe $180,000 on their mortgage. They've got 3 kids. Remember, we mentioned that they're 13, 10, and 7. Total annual income is between the two of them is $130,000. And then, how many years do you want that income to be provided? You can put in there 5 years, 10 years, 20 years, whatever the case may be. And then, how much money they may have in savings, and they may have $15,000 that's sitting in a savings account for like their emergency fund. And then, of course, they have how much they have in their retirement savings. And let's just say they have $60,000. Again, they're still in their late 30s, early 40s. And so they're still acquiring, they're still building up their 401k and their retirement savings. They may not have any life insurance. I use that they don't have any life insurance at all. So as you're putting in all this information, you're just keying in the information, utilizing the worksheet, and then it'll talk about inflation, and the average inflation is 3%. You'll hear that it's gone up higher than 3%. It'll talk about after-tax net investment yields, average like 6%. So it does all these calculations, and this is per person. Each person is going to need about $700,000 of coverage. A little bit less for Mary in this example, but when it does all the calculations for you, it's going to make the recommendation that they need $692,542.71 in life insurance. I'm going to tell you, as an insurance professional, it is okay to round up to $700,000. You may even want to do $750,000 just because you want to stay ahead of the curve on inflation. No beneficiaries ever complain that their spouse has left too much money in life insurance. And the thing is, we talk about the cost of things going up. Life insurance premiums have been going down, especially term. It has been going down. We're in the midst of term wars. One company lowers the rates, then the other companies follow suit. Then this company lowers the rates, and then they do this again. It's this constant ebb and flow of rates, but they haven't been going down, or they haven't been going up. They've been going down. So, Cody, I want to get back into the annuity side because we talked again about some of the calculators and some of the things there. And you've kind of brought up some of the key words, but what are some of the key words or some things that the client, the prospect might say that we should be listening in on that says, it's an annuity opportunity?
Yeah, very good. So you're right. Some of the key things I look for, or when I'm in those meetings or meeting with folks, especially, not everybody right away is going to go, hey, here's all of my savings that I have, and give you every single thing that they have. But along the way, you may hear some things such as, I got a recent inheritance. I lost my job. I'm retiring from my job. I tie a lot of those things to, okay, well, if you're losing your job, moving your job, or retiring from your job, you now have to look for safety of some of those funds or moving some of those funds around, especially for the protection and the guarantees that you will get. Some of the other things you may hear are poor performance or loss. A lot of folks will say, yeah, I have this other account and it really doesn't do much, or it's really not gaining anything, or I'm working with someone and my account's been losing a lot of money. Those kind of things. When I first hear that, I try to bring up, inflation and trying to protect those type of things with the client at that point. So very good question, Matt. I appreciate that.
So not a problem there. So are there simple ways, as somebody that like me, I know how to spell annuities, but are there simple ways to show prospects how annuities can protect them during periods of uncertainty, maybe market volatility, or during periods of inflation? Is there a simple way to say, look, this is what you're getting maybe in a CD, or this is what you're getting in a 401k, or in your own mutual fund or something like that you set up for yourself and your family, where there's that market volatility? Is there some way to be able to show them that, diversification? What are your recommendations there?
Yeah, so very good point. What I usually try to do, and something that we will definitely attach when we send this recording out as well, I'll try to make sure I add this document in, or a link to this document, is we have a very nice chart. And what this chart does is it will show you a simple breakdown of starting at $100,000, what happens with a red investment, which is going to be a 401k. It shows its volatility. It'll show it going up. It'll show it going down. And then there are two other colors that are on there other than the red 401k line. It will show you a fixed, which was our multi-year guaranteed annuity we talked about earlier, guaranteed rate going at just a steady eddy up the line. And then we'll also have our fixed indexed annuity, which will kind of go with the 401k, but always have that line of protection and guarantees built into it. I take this page with me every single appointment that I have, and mainly because I find that it's a very good way to show the type of investments you can offer to a client and the type of investments, as Matt pointed out, your mutual funds, your stocks, your bonds, your variable annuities, things like that, that maybe have a bit more volatility to them, or maybe some more ebb and flows to them, along their portfolio, where you can show them, look, there's ways to move those into a way safer, way more guaranteed, way more market protected version of what you have right now, that we're not really going to have to worry about those things going up and down over and over again, or worry about any of those losses that you have. So yes, to your point, there's a very good sheet. I will definitely add it in when we send this out, just so it is obtainable for agents to bring to clients, and just kind of explain simply, here are the two things that we offer, and kind of keep that conversation simple yet impactful by showing them look, when you lose money in a 401k, it can take years to get back to where you were when you lost that money. And that's really what these charts will show to you. It also has a very nice kind of scale of showing you here's things that are riskier, might have higher gains in them, but are riskier, versus some things that are less risky and still have a higher potential of gains in them. So it's a very nice way of showing where indexed and multi-year guarantee annuities can fit in that process.
Awesome. So Cody, I'm coming to you as kind of like a novice, somebody that just, I know it. Like I said, I know how to spell annuities. But I will tell you that whenever I've tried to have a conversation with somebody about annuities, it does evoke some anxiety, some fear, because I'm not well versed in that marketplace. What can you tell me and others that are in my situation that will calm those anxieties, those fears, and help me to not be so afraid to even have a conversation about annuities?
Yeah, very, very good point. I do think a lot of folks do feel that way. And again, it can seem overwhelming at first, and especially if you don't, have your hands wet with it before. But one of the things I will say is we look for kind of some keywords. And when I say keywords, what I mean by that is I just look to really hit home some points that I feel like if they listen to me for 20 minutes talk about annuities, this is really what I want them to take home at the end of the day. And those things are going to be safety, protection, tax deferral, and really the big one that we've talked about a lot here are guarantees. That's really the one that I really want them to take away from that, is whether they want to guarantee a rate for themselves or a growth for themselves or guarantee an income for themselves. I want them to take away the note that, okay, yes, this is going to have safety. It's going to be protected. There could be tax deferral opportunities for me there. And at the same time, I'm going to get some good guarantees here. My mentor always said, and one thing that I try to leave folks with is, okay, say you forget even that jargon I just gave you, right? I want you to remember one thing. With these type of annuities, you gain in the gains and you do not lose in the losses. And the reason I say that sentence is because think about it. Right when I was talking about 401ks going up and down, and I'm talking about safety and protection and all these things. Well, if you're gaining in the gains and never losing in the losses, you pretty much put all of those points into that sentence right there. You're going to give them a product that they can gain money in, they can gain income in, they can gain guarantees in, but at the same time, they're not going to lose anything anymore. And it can be a very good fit for their portfolio at that point. One of the pieces that we have on our website, if you go out under our annuity department, you will find some helpful pieces on maybe your first appointment. One of the ones I really like there are key advantages to annuities. And on that document, it has about 5 or 6 really hit home points. And again, the safety, the tax deferral, the protection, that's all on there. And it gives just a small little written information. But if anything, I bring that chart with me that shows the differences in the colors and the investments. And I bring kind of my advantages with me, because I want folks to remember those two things. And a lot of times, if they want to keep them, I would let them have them afterwards, because I want them to see what our advantages are and what those annuities can really do for their portfolio. So Matt, to your point, I think to ease some of that anxiety, it's really just preparation, maybe bringing some of these pre-prepared forms that we do have. And then again, that we'll also try to include whenever we do send this email out afterwards for the webinar today.
Awesome. Yeah. I tell people on the life insurance side, because ironically enough, we have a lot of people that are Medicare focused. So when it comes to life insurance or annuity side of things, they're very regimented because of all of the compliance things that they have to follow on the annuity side or on the Medicare side. And I keep telling people on the life insurance side, it's okay to make a mess. That is why you have me and colleagues, Cody, same thing, where we're here to fix. We're fixers. So go ahead, be willing to make those mistakes. That's going to be how you're going to learn.
Agreed.
And you're going to find that you have just tapped into another revenue stream that you didn't think you had access to in the past. One of the things when you partner with URLs that we know that the partnership with URLs, you need to take advantage of what we have to offer, because we understand that you are on the front lines of the industry. You're a trusted advisor. You're guiding individuals. You're guiding businesses, business owners through various complexities of life, annuities, health insurance. So your ability to understand your clients' needs is extremely important. It's vital to being able to protect and safeguard their assets and financial well-being. That's what we do as fiduciaries, and we are committed here at URL to supporting you with a comprehensive range of products and tools and resources that are going to benefit you and your clients first. Here at URL, one of our taglines, and it's not just a tagline, we're committed to being in the people business. We're here to help you help other people. And with that, let me put our contact information down. Cody had a lot of information, and I was trying to take some notes mentally and also physically as you were going through some of this stuff. But if you do have questions, pick up the phone, give us a call, connect with us online. Cody's phone number is 717-216-8063. You can reach me direct at 717-216-8041. So I do have some questions that have come in here. Let's see here. Rena said, when entering, I believe it stated that this is being recorded. Will the recording be sent out to the attendees? Absolutely. Yes, they will be. The recording, along with some of the other tools and resources that we've talked about, will be sent out to everybody that's attended. So great question. Thank you very much for that question. Cynthia asked the same question. Can I get a copy of the presentation? So yes, a copy of the presentation will be sent out. If anyone does have other questions, please ask us. We are here to help you grow your business, and really you don't need to operate with blinders on and just stay focused in one particular market. We do a whole host of things here at URL to help you and ultimately to help your clients. Again, it goes back to our promise to you. So again, if you do have any questions, feel free to reach out to me, Cody, or any of our colleagues here at URL. We're here to help you and support you every step of the way. So I don't see any other questions coming in here, Cody. Cody, I appreciate you partnering up with this. Any last parting words?
No, thank you again. I appreciate it. And to everyone out there, as Matt mentioned, do not hesitate to reach out to us and ask. We are so used to the cross-selling opportunities that are out there and folks that have a range of different experience in this. So don't ever hesitate. There's never a silly question. That's what we're here for. We are here to be the backbone for you and to help you be better at your job. So don't ever hesitate to reach out to us. We appreciate you, and thank you so much for your business. Matt, thanks again so much for having me on today. I appreciate it, man.
My pleasure. Thanks, everybody. Have a great day, and keep us as a resource. We appreciate your partnership and your time today. Take care, everybody.
Thank you.